Imagine walking into a supermarket, grabbing a bottle of water, and realizing you aren't just buying a drink. You're paying a subscription fee to the new masters of the planet. While the world was distracted by AI bubbles, crypto crashes, and the digital gold rush, Wall Street quietly executed the ultimate buy and hold strategy. They aren't buying companies anymore. They aren't even buying land for the sake of the soil. They are buying the one thing you cannot live without for more than 3 days: water. This is the story of how the most fundamental human right became the world's most aggressive asset class. Welcome to the era of blue gold. For decades, we were told the next great wars would be fought over oil. We were wrong. Oil is replaceable. Hydrogen, electricity, and nuclear power can fill the void. But there is no synthetic substitute for H2O. Wall Street has realized that in a world of infinite money printing and finite resources, the person who controls the tap controls the economy. For a century, water was boring. It was a public utility managed by bureaucrats in dusty municipal offices. It was the unsexy part of your tax bill. But the math has fundamentally shifted. We are looking at a $1 trillion monopoly in the making. Since 2000, water prices in major U.S. cities have surged by over 150%. In places like Austin or San Francisco, water bills are rising faster than healthcare, faster than housing, and significantly faster than wages. Why? Because scarcity is a feature, not a bug, for a hedge fund portfolio. When the supply of a life-critical resource stays fixed and the demand grows exponentially due to population and industrial needs, you don't have a free market. You have a hostage situation. This isn't just inflation, it's the systematic financialization of nature itself. We are moving from a public good model to a maximum extraction model, where every drop is tracked, priced, and leveraged. Let's look at the players. Names like Goldman Sachs, Blackstone, and Brookfield aren't just investing in pipes and pumps, they are buying water rights. This is a legal concept that dates back centuries, but it's being weaponized for the 21st century balance sheet. In the American West, there's an old saying, "Whiskey is for drinking, water is for fighting." Today, that fight has moved from the riverbanks to the high-rise boardrooms of Manhattan. Private equity firms are purchasing massive swaths of agricultural land in states like Arizona and Colorado. They don't care about the alfalfa or the cattle. They are buying the senior rights attached to the land, the legal priority to take water first during a drought. They can then fallow the land, let the crops die, and lease that water back to starving cities or thirsty microchip factories at a 1,000% markup. It's the ultimate arbitrage. Buy a distressed asset from a struggling farmer and sell the lifeblood of a city to a desperate municipality. This isn't just an American phenomenon. It's a global land and water grab. From the disastrous privatization of Thames Water in the UK, which left the company drowning in debt while shareholders took billions in dividends, to the massive desalination projects in the Middle East controlled by private consortiums, the financialization of water is accelerating. Wall Street views water infrastructure as the perfect toll booth business model. In a volatile world, investors crave non-correlated assets. When the stock market crashes, you still need to flush your toilet. When inflation spikes, you still need to drink. By owning the infrastructure and the rights, these firms create a guaranteed, inflation-linked revenue stream that is legally protected. You build the toll booth once, and everyone on Earth is forced to pay you forever just to exist. The risk is almost zero because the government will never let a water utility fail. They will bail it out with taxpayer money, socializing the losses while the private firms privatize the profits. The real shift: The moment the game changed forever was in December 2020. That was when water started being traded like oil, gold, or pork bellies on the commodities market. The launch of the Nasdaq Veles California Water Index, NQH20, allowed investors, speculators, and hedge funds to bet on the future price of water. Proponents say this helps farmers hedge against drought. The reality is far more cynical. This turned a biological necessity into a speculative playground. When a hedge fund bets that water prices will go up, they have a massive financial incentive to ensure that infrastructure remains inefficient, that conservation efforts are sidelined, or that high-margin industrial use is prioritized over local communities. We are transitioning from a world where water was a shared heritage, a commons, to a world where it is a proprietary, tiered product. If you can't pay the premium price, you get the basic service, or worse, nothing at all. Consider the role of big tech in this monopoly. A single data center can consume millions of gallons of water a day to cool the servers that run our AI models and cloud storage. Companies like Google, Microsoft, and Amazon are now competing directly with local farmers for the same water sources. When a private equity firm owns the water rights in a region, they aren't going to sell to the farmer growing corn for pennies. They are going to sell to the tech giant that can pay top dollar. This creates a feedback loop where the cost of living increases because the cost of the most basic input, water, is driven up by industrial giants and their financial backers. The invisible hand of the market is currently wrapped around the throat of the world's water supply. The structural decay of public infrastructure has provided the perfect Trojan horse for this takeover. Most water systems in the West were built 50 to 100 years ago. They are leaking, crumbling, and require trillions in upgrades. Cash-strapped local governments are faced with a choice: raise taxes to fix the pipes, which is political suicide, or sell the system to a private partner who promises efficiency. These private firms move in, take over the local monopoly, slash the workforce, defer long-term maintenance, and hike the rates. By the time the public realizes they've lost control of their most vital resource, the contract is locked in for 30 or 50 years. It's a slow-motion surrender of sovereignty, 1 gallon at a time. The lesson for the modern investor, the entrepreneur, and the citizen is both clear and chilling. The most valuable assets in the 21st century aren't digital. They are physical and foundational. As climate volatility increases and black swan weather events become the norm, the gap between those who own the taps and those who pay the tolls will become the new class divide. This is the new feudalism. Wall Street isn't betting on the end of the world. They are betting on the price of survival in a stressed world. And currently, they are winning because they are playing a 50-year game while everyone else is looking at 24-hour news cycles. If you want to understand the true future of the global economy, stop looking at the tickers on Wall Street and start looking at the meter in your basement. The rain isn't free anymore. It's been bundled, securitized, and sold to the highest bidder. The tap is no longer a public service. It's a profit center.